Good evening, everyone. My name is Jeffrey from Edu Network, and today we are going to be doing FAC for 3764. Okay, so today we're going to start on a new topic, which is IFRS 5, non-current assets held for sale. All right. So if it's your first time, we will be doing we're going to cover two questions. One will be from Gripping Gap, right? Gripping Gap, there's a good question there, that one, because it covers Goodwill. And then we're going to do a past paper from FAC 3702, which is 2021, right? That's the one that we're doing since last week. So we have to finish up on the disposal group, okay? And then I think we're going to also meet tomorrow and Wednesday. Yes. So tomorrow we'll then go over the study pack, okay, that I saw in the group. I'll just choose a question from there, and we'll also meet on Wednesday. So Wednesday will be our last day. So at Thursday, we polish up and get ready for Friday. Okay. So I'm going to share the notes on the screen. Okay, so if you can't hear me, please let me know. And please let's mute unless you want to ask a question. You can raise up your hand and feel free to ask any question, any question. All right, this is your class. My desire actually is for everyone to pass. Okay, so feel free if you have any questions. All right. Okay, so these are the notes that I have. Okay, right. So it's IFRS 5, non-current assets held for sale. All right, so I'm just going to read briefly, but I will explain more, right, as we go. So don't worry. So it reads as follows. This is a standard and that covers assets and liabilities that are to be disposed of in the near future, okay? Right, their value will be covered through sale. So we are talking about a group of assets, right? That the company is deciding to what? To sell, right? So those assets, right, are to be disposed of. The company wants to sell, okay? The company wants to sell a list of assets. Sometimes it can be a single asset, but I know that for your exams, it's going to be a disposal, okay? So just know that it's a list of assets and liabilities. It's not just assets, but I will explain further. Okay, and then so the reason why I wrote this point is we're saying their value is covered through sale. Because so you know that in accounting, whenever something is being taken out of the company records, okay, any assets are taken out at their what? Carrying. You understand? You take out an asset at its carrying amount. If you didn't know, now you know. Whether it's a vehicle, you calculate its carrying amount. What is the formula? Cost minus accumulated depreciation. Okay? Then, right. And then you will get the what? Carrying amount. So I'm saying to you that sometimes you find that something is recovered through use. Okay? Through use. All right? But I won't explain that sentence for now, right? But what you should know is that assets, right, whenever they are going to be sold, we are saying they're going to be recovered through sale. That means the carrying amount, the company will be able to redeem its carrying amount through selling the asset, right? These assets, non-current assets, right, will be derecognized from the books at their what? Carrying, which is what I was just explaining, right? They will be subsequently, upon reclassification, be recorded at the lower of the carrying amount or fair value, less cost to sell, right? Typo error there, right? So it's supposed to be fair value, less cost to sell. Fair value, not of value. Fair value, less cost to sell. Right. This will give rise to an impairment loss. It's not every time, but for the sake of your exam or your tests, there will be impairment loss because that is the whole idea, right, of them examining you. Because if there's no impairment loss, then it's pointless for them to examine you on IFRS 5. Okay. And then the entity decides to reclassify more than one asset or liability as held for sale, a disposal group will be formed. Okay. Right. Then before we get to this side of the notes, let's go to the whiteboard where I had to include additional notes. Right. So here we are saying we've got non-current assets held for sale. All right. So when it comes to these non-current assets, guys, it can be a building, it can be land, right? It can be equipment, it can be machinery, it can be furniture, it can be vehicles, right? As long as a company decides that they want to sell, right, a group of assets, right, for whatever reason the company might have. Then if I may go to the question paper that we're going to cover today, right, it's the one that we've been doing for the last lessons since we met, right? So it's this one, FAC 3702, right? We covered the question 2 because it was dealing with intangible assets. So I said we're going to start on this one, on the division, right? So let's find out one of the reasons why a company would want to dispose, right? Remember, this scenario was dealing with a saloon, right? I can see that most of my clients are women, so you understand salons. So here now they are saying, due to the significant price increase of the components used by Love Hair Limited to manufacture the hair salon treatments, management decided to discontinue the manufacturing of these treatments and to dispose of the related assets and liabilities of the division in a single transaction, to say, go away. All right. So it's a I don't know whether you watch movies, right? But you see that mostly in the States where they say there's a garage sale, all right? I don't know, I've not seen a garage sale in Africa, right? But in the movies, you know, there's something that they call garage sale. So you are going to what? You are going to display all the items that you want to sell right in front of your garage, okay? So, and then you want to sell everything, right, at one go. All right. So that is what happens. A company will have a list of assets, all right, that is part of maybe a division. Okay, maybe it can be a branch, it can be a division. Let's say, for instance, Pick and Pay, right, wants to sell one of the branches in Mpumalanga. Okay, so they are going to list all the assets and liabilities there. Okay, then they will want to dispose of that. So that means that will be a disposal group. Okay, that will be a disposal. Okay, so just not that in every question they are going to give you all the list of assets and liabilities. They will always give you, right? But I'll go into detail, all right, on the allocation and everything, right, that pertains to that calculation. That's what you need to know today. Okay, so here they are giving us the list of what? Of the assets. Management indicated that the disposal group would be sold for cash on 30 December 2020. The disposal group consists of the following: land, manufacturing, building, inventory, account payables, and the total. Remember, this is an exam, everything is timed. So some of the information will be provided because they are testing you on a principle. They're not trying to kill you. No. They just want to determine whether you understand a certain principle. So whenever they give you a question on IFRS 5, they are going to give you the list of assets. Then they will change one or two things there, right? Which is where I come in. Okay. So does anyone have a question so far with what I've just explained since we started the session? Okay. So if there are no questions, right. So this is an example. So I just wanted to let you guys in on an idea on how a company and why a company would want to dispose. Okay, so there is an example. All right, so let's go back to the whiteboard. Okay, so as I say that there is going to be a list of assets. Okay, and then I went on to say here, right, the allocation of impairment loss does not apply to. Okay, so for now, let's just memorize this, right? And then we're going to do an example, and then everything will become clear. Right, investment property measured under the fair value model, number 1. Number 2, deferred tax assets, right? Number 3, current assets. Number 4, liabilities. Okay, right, and then I said nota bene, right? Or note The above will still be classified, presented, and disclosed under IFRS 5, right? Under IFRS 5. So they will still be under IFRS 5, but we will not allocate impairment loss. This is very important because you might waste time trying to decide which assets will receive the bread, which assets will receive the impairment loss. So please, if you have a notebook, write down these assets or write down these items. They will not be subject to impairment loss allocation, but they will still be classified under IFRS 5. All right. And then I went on to say, not after classification as held for sale, right? Follow the what? Follow the IFRS principle, which is the disposal group should be measured at the lower of carrying amount or fair value less cost to sell. So you are going to list all the assets. If there's a building, if there's a land, if there's inventory, what, right? You total, right? That amount will be the carrying amount of the group. I repeat, you are going to be given a list of assets, and then you are going to calculate the carrying amount on the date when those assets were classified as held for sale. All right. Can you please mute? Yes, Kamo.
Hi. So what you're basically saying is for each asset listed, we are going to calculate its carrying amount separately.
Thank you. Thank you.
Okay.
All
From
right.
when up to the date it was held for sale.
Held for sale. Very correct.
Okay.
Right. So you are going to do that. And then from there, you are going to say, Kamo, you're going to say asset 1 plus asset 2 minus liability, right? You get the carrying amount of the whole group on the date when it was classified for sale, right? I'll present a diagram right now just to show you the picture, all right, on what really happens. Okay, so when you get to that point of getting the total of the group, you compare that to the fair value less cost to sell. You compare that to the fair value less cost to sell. I repeat, compare that carrying amount to the fair value less cost. That's where you will determine if there is impairment loss or not. Right. On the next page, if the disposal group is impaired, if, right, for exams, it's actually always, but because this is a class, it's not always. In reality, it's not. Okay. But if, right, the disposal group is impaired, right? Remember, impairment from last week, we said is what? According to IS 36, it is your what? Carrying amount minus the recoverable amount. Okay? So we are saying that if it is impaired, someone on the group during during the weekend, right, asked, what if we are given goodwill as part of the disposal group? I am going to address that. That's why I chose the question on the gripping gap. It's got a goodwill, right? So the goodwill, right? Then goodwill, if given, should be allocated the impairment first. I put because that's where you will either get the marks or I hope everyone can see what's on my screen. Right. I repeat, I say, if the disposal group is impaired and you see that, okay, on the list, there's inventory, oh, there is goodwill, right? Once you calculate that, okay, my group is impaired, how do I know it is impaired? You say carrying amount minus fair value. Then if the carrying amount is more than the fair value, then your group is impaired. Then you need to allocate that impairment to certain non-current assets besides the. Okay, but if there is goodwill, right? Who goodwill will get the first share of the cake? Are we together? If goodwill is around the party, right? No matter whose party it is for, goodwill always gets the first share of the cake. If you can remember it that way, okay? Goodwill will always get the first share of the cake. Even over. Forgive me, guys, that don't know me. I like to draw. Right, diagrams work sometimes. This is a red cake. All right. So we are saying that goodwill will always get the first share, even if goodwill wants half. Right. Goodwill will always start. Don't forget this. First, always. When someone says always, it's always. It's not sometimes. Okay. Then the remainder, then the balance or the remaining cake, right, would then be allocated proportionally, right, to the non-current assets held for sale, right? This is non-current assets held for sale. That is the abbreviation. So once you see this, don't panic and say, what's this? I've not seen this in accounting in my life. No, it's non-current assets, just the abbreviation, because it's a bit lengthy and long, right? So this will then be allocated to the others, right? Then we say, okay, land, you can get your share. Building, you can get your share, right? Equipment, you can get your share. Okay, from this remaining piece. That's how it works. Right, so there is my diagram. Right, let's go to the question on descriptive. All right, so I like to use descriptive because that's where they take most of your questions. So descriptive or gripping gap, right? That's where they take most of your questions, the principles, they take them from there. So as I always tell my students, these days, in this day and age, you cannot depend on past paper anymore. No, if you're doing that, stop, all right? And I'm telling you in confidence, stop, right? Read the full material, okay, right? Read the full material. If you are given the prescribed textbook before, you can even ask the other students that we taught 5 years ago or something. We'll tell them, don't buy textbook, no need for the textbook. We'll just do 3 past papers, you go and write. That's how they asked, and people would pass easily. It was predictable. In our days, I cannot predict. I can only sense because of the weight of the topic. This one is a heavy topic, so they like it, you understand? But please, please, please read your textbooks. Once we do an exercise in class, go and do other questions on the textbook because the lecturer likes to take principles. All right. Then after that, you can then go to the, so past papers should be the last resort. Your study packs, they should be the last resort after going through all the material so that now you go and practice for the exam. Speed is important. Thinking fast is important. And for you to think fast, you should have then come across a similar question or layout or something. You understand? But please, principles is what they're going to, okay. Right. So if you got your gripping gap, right, we can go to page, 636. There's someone with their video open. Please close it. It's affecting my screen. Hello. iPhone. Thank you. Right. So let's go to the question. It's a nice question and it covers the principle, right? Okay, so it's example 11. Just write it down so that you can look at it after, right? It reads as follows, right? A Limited disposes of a group of 5 assets and a liability in a single transaction. So it's a disposal group. All right. On 20 June 2003, sorry, all criteria for reclassification as a disposal group held for sale were met. So this should be met, but we'll go there, right? We'll go there, right? On the rules for a disposal group to be classified as a group, right? What should happen? Right, immediately before the assets were classified as held for sale, they were remeasured in terms of their own relevant standard to the what? To the following carrying amount. All right, so this is what Ukamo was asking, okay? This is what Ukamo was asking. Right, inventory was 70. So this is the currency. This C stands for currency. Because it's a textbook, so it's going to be worldwide. So they don't know which currency. They can't use dollars, they can't use rands. They just say C. C stands for currency. Right, 70 currency. The net realizable value, 70. Right, I will explain this. PPE, 150. Recoverable amount, 150. Investment property measured using the fair value model, 80. Investment property measured using the cost model, 50. Recoverable amount, 60. Goodwill, 30. Trade payables, 10,000. There is a question. This is an exam on Friday. What do you do? Okay. What do you do? Where do I start from? Because the other thing that troubles students is where do I start? Okay, I hear what you're saying, but where do I start from? I've been given a disposal group. Where do I start from? Where do you start from? start by identifying the date when the group met the requirements of IFRS 5, right? So this was 20 June 2003, right? Most of the times now for your exam, they will give you the dates for these, right? Sometimes they will say maybe for the PPE, they give you the beginning of the year carrying amount. So you need to further depreciate until that point, until the point when the criteria for classification as held for sale is met. Let me show you this diagram so that it makes sense. Right. So you are going to have your list of assets, right? And then there is the criteria being met point, right? So what we are saying is that this is your list of assets. Whatever assets they give you, don't worry. And I can bet you don't give you more than 5 in an exam because your exams are timed. So they are testing on principle. They're not trying to kill you. Okay. So on your list of assets, right? You are going to measure, right, their carrying amounts on this day, right? All assets that you're given on this day, right? And then when I'm drawing these arrows, for instance, if there is a building, right? A building uses which standard? Which standard do you use to recognize a building in our financial statements? Accountants? Which standard?
IFRS 16.
No, not IFRS, no.
IFRS 16.
Yes, you. All right. All right, you make me faint. Okay, so we use this standard. So what they are saying is that you are going to determine the carrying amount, right, of this building up to this point. Then you stop. Then you stop. You do the same if there is equipment, right? Equipment uses which standard? Equipment, accountants?
IAS 16.
16. Yes. You do that and then you stop there. You stop there. And then let me just ask, all right, patents, which standard?
IAS 4.
Come again?
38.
IS 38.
Intangible asset.
Thank you very much. So you need to know all these things, accountants. If you didn't know, it's a learning curve, yeah? Right. Yes, your line is breaking. Line is breaking. Right. So that's the standard, right? So this is important. You need to know this. So you are going to like for patents are intangible assets. They are intangible. You can't touch them. So we amortize. So we amortize until this point, until the criteria, right? Right. Until the criteria is met, right? Then you stop. Okay. That's what I mean. So that's your starting point. If you are given the assets, you are going to what? Move them until that point when the criteria, according to IFRS 5, is, then you stop, right? Then from there, you are going to write their carrying amounts. Write their carrying amount, okay? Then you get the total. Then this total, you are then going to compare this total. This total is called the carrying amount of the group minus the fair value, right? Less cost to sell, if they are there, right? The less cost to sell. Remember, less cost to sell is minus. The fair value minus any cost to sell, right? And then most of the times you then get this baby called impairment loss. That's the name of the baby, impairment loss baby, right? So that's where you start from. Anyone with a question with that I've just explained? Anyone with a question? Right. If you don't have any questions, if you have noticed, right? When it comes to this is called non-current assets held for sale. Okay, accountants, there's a difference between current and what? Non-current. So non-current assets held for sale, that's where you're going to allocate an impairment. Do not allocate current assets there. Okay, do not allocate. And I repeat, do not allocate any impairment loss to the what? Investment property measured under fair value, not cost, fair value. All right. If we had, right, let's try and answer this question. Right. So now with inventory, what standard is used to measure inventory? Who knows? Which standard do you use to measure inventory in the books?
IS2.
IS2. Thank you. It's IS2. Right. What does IS2 say about inventory? What does IS2 say about inventory measurement? in the books?
Inventory is measured at the lower of cost or net realizable
values on. Right. Inventory is measured on the what? On the net, on the costs or the net realizable value, whichever is lower. Okay. So that's why there on the notes I said you are going to use the standard applicable to that particular asset or liability. Use the standard that is applicable. That's why you need to know. That's why I'm asking which standard. Because at this level, you have to know there's no longer cramming to say, I just want to write and pass. Okay, so inventory is IS2. IS2 says if you are going to record any inventory, your stock, your stock, measure it at the lower, not higher, lower of its cost or the net realizable value. Okay, but you're going to cover this topic at length when you're doing postgrad. Undergrad is not there. You can get away with it. Maybe besides, what you call this? Management accounting. That's where you have a bit of right. Management policies and stuff. Right. So here they are the same. But in a question, if this was lower, if this was 60,000, I hope you can see. If this was 60, the rules of the standard says lower. So you also follow suit. Remember the road sign says keep left, says robot stop. So follow suit. Here I'm telling you, when it's lower, take the lower. That's the rule. So we're going to take what? 60. But because they are the same, so there's no difference. That means this one is okay. Okay. That's the only tricky part when they give you any as part of the what? Disposal group. Right. When it comes to PPE, of course, this one is straightforward, but normally they will want you to calculate depreciation. So if you're an enemy to depreciation, you need to go back and reconcile, right? And make peace with depreciation and start practicing depreciation, because you'll get a question with only 3 assets, but they confuse you through the depreciation calculation. Then you panic. Okay, so this one was kept simple. They said 150. Recoverable amount is 150. So that means this one is correct as it is. All right. Then if it's lower, I will have to explain tomorrow, right? Just a twist to that one. But for now, because I'm introducing you to a topic, it's okay. Right. And then investment property measured using the fair value model. You take this, okay? You take that fair value. Straightforward. Okay? And then investment property costs, that and that. You compare whichever, right? Whichever what is the lower one. For now, the cost model is the cost amount is lower than the recoverable amount. So we are happy. That's why I'm saying, okay, with these two, if there's a twist, I will then give you that extra information tomorrow. Right. And then goodwill, no storage. They'll just give you. All right. Then trade payables as it is. Okay. But it's a liability. So please don't forget liabilities. You indicate by what? Showing brackets to brackets. If you get the bracket, all liabilities. All right. Then they're telling us that the fair value less cost to sell of the disposal group on this date is 270. Right. Now let's put this information on the what? On the whiteboard. So what you start? Right? You will not be penalized with starting whichever. You can start with whichever asset you want to start with. Right. So we said we have inventory. Inventory. So we're saying carrying amount on classification. All right. So I'll just come and say what? 20 June 2003. All right. That is the date. What is the inventory? All right. So it's 70. You take 70. Oh, okay. Number 2. Right. The PPE. The PPE and the recoverable amount were the same. So we are going to take the what? The 150. What else do we have? Number 3, we've got investment property, right? This one is fair value measured, right? IFRS 13, right? And then what was the amount? It was 80, right? Number 4, it's an investment property, but this one is using the costs model to measure, right? Which is how much? Which is 50,000. Then number 5, we have our friend called Mr. Goodwill, the guy that wants to be the party wrecker, right? Right. You add. Number 6, you have the trade payables. Right, these are liabilities. Don't forget the brackets. Once you forget the bracket, you are indicating something. All right. Then you add everything, is there. So because I'm giving you guys the principle. This is the carrying amount. Carrying amount, right, of the group on this date. I hope we can all see. Right. You can see my steps. That's what you have to do as well. Then what you do now, remember, in accounting, we test. Test for what? Test for what? Who knows? Test for what?
For correctness,
Huh?
for impairment or correctness.
Hey, Johanna, impairment. Test for impairment law. So you test on this date. All right. Yes, I think someone asked when we're doing IS 36 last week. They said, Jeffrey, so we do the testing at the end of it. I said yes, but I said with the exception of IFRS 5. IFRS 5 is whenever you classify a group or an asset as held for sale, you test for it. That's the only exception. Don't forget. So we test for impairment on 20 June. Right. Then we say, okay, what was our carrying amount? Our carrying amount was that minus the fair value, less cost to serve. Right. We're given as well. Right. So please look at this figure and look at them properly, right? Nicely. Take your time. Which one is bigger?
Yeah, carrying amount.
The carrying amount is bigger, right?
Mm.
Do we all agree?
Yes.
So if the carrying amount is bigger, people, right?
There's
Then
impairment.
exactly, Johanna. Thank you. Clap hands for Johanna. Right. So there is impairment, because you won't forget. Right. Then there is impairment of how much? Right. Now that one is between you and your calculator. I can't teach. Right. So there is your impairment loss. The next column, Tashin, says allocation of impairment. Now we want to allocate the impairment because we are saying the carrying amount of the group is bigger than the fair value less cost. So we want to allocate because there is more than one asset. But now we are saying, okay, because of the rule that I told you, remember this rule, the cake. All right, who gets the impairment loss first? Hello, class. Oh, Goodwill. Oh, Rebecca, you're here.
Goodwill.
Right, Goodwill get the impairment loss. How? Right, it's simple. Right, this is 100,000. So Goodwill will start and say, okay, how much is my value? My value is 30. So in the exam, the value of Goodwill might be 500,000 and the impairment loss is 600,000. So Goodwill will take the whole of 500,000. Then the remainder will be shared by the other people. All right. So that means you'll come here and say 30,000 in brackets, people, in full. Then you come and show here to say, oh, okay, we have allocated, right? This 100,000, we have removed 30,000. How much is left? 70,000. Right. Are we still following? Right. Then from there, we go back to our rules here.
Yes.
What did I say here? Right. Allocation of impairment note does not apply to what?
Investment property.
And finish to the end.
Measured under fair value model.
Right. Number 2.
Investment assets.
Number 3.
Current assets.
Number 4.
Liabilities.
Yeah, right. Let's come to the list. That's the same list. So in the exam, they will always examine you on that. Okay. I can't leave out something on purpose to make you fail. Of course, there is. Sorry, can you mute? Can you mute? Right. There is agricultural assets, but you guys don't do agricultural assets, right? It's what is it's IFRS 40. You guys don't do that. 41. Right, you guys don't do that. So that's why I didn't. I'm including things that are part of your syllabus. So the examiner might give you a list of assets, and then they want to waste your time because now you are thinking, okay, I've seen Goodwill, I remember Goodwill, but now how do I allocate the remainder? How do I do that? So what's important for you to remember now? Write on a piece of paper, or you're memorizing, or you're going to go over the recording after. Right? Can you mute, please? Right. You have to remember this list. Right. You have to remember this list. There is no other way. I can't help you because I've given you the notes. So I encourage people when they're in class, have a notepad. I write my stuff on my notepad. So that even later or another 3 months, I can go back because we are all individuals. I'm not a computer. I forget. All right. So, right, so that when you're on your own, you can revise and pass. That's the whole idea. All right. Okay. So once you've done that, we now come here. Right. Remember, this is the current asset. So do we allocate impairment to this one?
No.
No. So now at least you even know if the question comes in theory, they say discuss. Sometimes they like to say that, to say discuss, right? The allocation of impairment on this group. Discuss. Okay. Right. PPE, right? Yes or no?
Yes.
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 Right. Investment property at fair value.
No.
No.
Thank you. Well done. Right. Investment property at cost model.
Yes.
Yes.
Just follow. I never said investment property at cost. There's nothing on that list. So it's definitely right. Goodwill. Okay. Yes, obviously. Right. Trade payables.
No.
So in the exam, please remember your yeses and you'll be safe. So how many assets are left that we're going to where we wrote yeses? Is this one and which one?
2.
2.
That's it. Then you allocate. Right. So how do you allocate? You're going to take their balances, right? Remember, the PPE was how much? 150, the carrying amount, right? The investment property was how much? Was 50. Yeah? How much do you get in total?
200.
Then you allocate. You come and say, okay, therefore, all right, you can come and do it here. Come and say, okay, therefore, I'm going to say what? 150 over this total. Yes, don't, please, I beg, don't say over this total. This one is just for the whole group so that you get this impairment loss. But the allocation of the impairment loss does not go to everyone. Right. Then you say over 200. Then you multiply it by the impairment loss that is left. Remember, Goodwill took everything. Ne? Goodwill took 30. How much is left to these guys?
70.
Yeah. Kanjalo nje. Follow. But you need to practice. If you keep it here and think you have made it. Right. So you can come and say 70. You get your answer. You come to this one. You come and say 50 over 200 multiplied by 70. How much do we get?
52,500.
Here. Come on, guys. We're so many. Let's practice. Don't practice on Friday.
175.
175, 500. Accountants, why is it? This is wrong.
Yes.
Huh?
No.
No.
17,500.
Yeah, 17,500.
Thank you, Tashin. Right. You then take these and then you come and place them here. So here you say dash. Here you come and place your what? 500, right? In brackets, ribs. You're not adding it, you are removing it because you are reducing. Then this one we said no. Dash. This one we said yes, the 17,500. Okay, in brackets. This one we said no, right? Then we are done with this column, right? If you add this plus this plus this, it should then give you what? Anyone?
It's all fun when we're doing this together, but during the exam, it becomes really, really difficult. So is this asked as a separate question or it gets integrated with other questions?
About the integrator. All right, they will integrate it. Definitely integrate. There's there's last year's test, right? On disposal group. They integrated intangible assets, right? Where you had to first calculate the research cost, development cost, right? And get the amortization, then transfer that intangible assets to disposal group. Then calculate impairment loss on the disposal group. That's how they did it.
Okay.
So that means on that question, they were testing on IS 38, IS 36, IFRS 5.
All right.
Okay, so what you do? Okay, are we satisfied with the column number 2?
Yes.
Right, let's go to column number 3. Column number 3 now, you transfer these figures, right? 70 minus 0, 150 minus that, you get how much you get?
97,500.
Right, 80 minus 0,
8.
50 minus 7,500.
32,500.
How much?
32,500.
Right, 30 minus 30.
0.
Right. 10 minus 10 minus 0. Right. Right. And then can someone add here and tell me what you get here? There's magic then. You see the magic.
270.
That's the magic. Pelly. That's how you answer IFRS 5. So IFRS 5 will come as a note. If it comes in note, it will come as a note. If it doesn't come as a note, it will come as a journal. Yes. It will come as a what? Journal. So remember, and I will look at this. This is a calculation. It's not the note. This is a calculation. That's how you calculate. Right? I will show you the note. But this is right. So if this question had said, can you mute? Right. So if the question requires you to generalize, because that's where I come in to say, okay, let's try and cover all bases so that when they say journals for 10 marks, they're like, what do I do? What do I do? Right. So in the first place, we are generalizing the what? Generalizing the impairment loss. Right. Impairment loss is the what? Accountants? Expense. So expenses increase on which side?
Debit.
So you come here and say, Mr. Examiner, here are my 10 marks. I want them in full. Right. You reference your work. Maybe you say calculation 4 or working 5 or working 10 or whatever. Please, on Friday, don't forget to reference. No matter how much you're rushing, reference where you got impairment loss. All together. So you'll come here and say 100,000. Right. Then you'll come here. Remember, so you are debiting. So you're realizing an expense in the P&L. Then what will be the opposite? Remember, what affected this impairment is your what? They are called assets held for sale. Né? Asset held for sale, right? You had the what? You had the PPE, right? You had the other asset held for sale. You had the what? You had the investment property. Then the last one was what? Goodwill. So this is SFP. Don't forget abbreviation, accountants, abbreviation. What are we doing here? We are reducing assets. Assets by nature have a debit balance. So when you find yourself crediting an asset, you are reducing it. So you are reducing an asset by how much? Here you're reducing an asset by what? Reducing the investment property by how much? Goodwill. Then you will get your 8 marks. Are we together? Right. So that's what you get. So we're going to do the next question. And this time is you guys doing it. That's how we practice. Right. So before I go there, let's go to the notes so that I address something, just in case they give you more theory. Let's go to my notes. Right. Okay, so you remember I mentioned the list of assets. And okay, besides the assets that we're doing, right? That practice question that we just did, right? For that asset to be recognized as held for sale, right? It has to meet all of the required people. So this theory you just have to know, right? So if a company, even a company that you're working for, if they decide they want to sell a branch, right, and they have assets and liability, okay, before they can say these are assets held for sale, they need to meet all these requirements because we aspire to be accountants. All right. Don't tell your brain that I'll be asking Jeffrey when I'm lost. Nah. Just say if I don't know something, you get angry, you go and read. Okay. Get used to the reading. Then you enjoy knowledge is nice when it's enjoyable, right? When we're now understanding. But for you to get there, you need to work hard. Nothing comes easy. Right. Okay. So they are saying, so what is one of them? The assets must be available for sale in its present state or condition. So if you find a question telling you that no, they want to sell equipment, but before that, they want to replace the ball, whatever parts, right? Whatever is the major part of that equipment before they sell it. No, then therefore it doesn't qualify. We want you guys to classify that asset to be held for sale. So for it to qualify as held for sale, it needs to be sellable in that condition and state, right? With that rust, right, and cracks. Okay, the sale must. Sorry.
I'm saying footstock. Is it footstock or what?
Man, I was
Prostitutes is when you sell a property or something with its condition, whether it's broken or not.
Oh, okay. Okay. Thank you. Right. Point number 2, the sale must be highly probable with management committed to sell the non-current asset. Right. These guys should be committed. They shouldn't be lazy or procrastinating. Right. They should be committed, making calls, all right, meeting people. Okay. But you get that information obviously in this scenario, right? So you pick something up that would indicate that these guys are committed. They want to sell. So there should be commitment. That's the main word there, committed. Right? An active plan to allocate a buyer is initiated. Okay, people, there is what a company has allocated an advertising cost just to advertise to find a buyer. They've said, okay, we are going to hire a task team to try and look for a buyer. Guys, can you please advertise this building? We want to sell it. Okay, so okay, the asset must be actively marketed for the sale. Okay, for sale at a price reasonable. Yeah, it should be a reasonable price. Normally the market value, something, or even slightly less, but reasonable, right? The sale should be expected to be completed within 12 months or 1 year, right, from reclassification date, unless there are extensions beyond the what? The entity's what? Control. So that means it should be sellable within what? Within 12 months. All right, within 12 months. And that means normally in an exam, they won't tell you that within 1 year, right? They'll just tell you that, okay, let's use the calendar year. Let's say, okay, there's January 2024, 31 December 2024. Right. You decided in winter, right? There's no business. Then on 1 June, right? 1 June 2024, you're like, you are saying, okay, we want to sell. And then there should be an expectation that you will sell before the next what? 1 June 2025. Okay. Don't worry about saying it's the current year ends here. No, you're looking at 1 year from that date, right? There should be a possibility of what? Of a sale of that disposal group. Okay, no plans to withdraw from the sale activity. No withdrawal. Are we together? If there is intent to dispose of more than one asset, the group of assets will be measured individually to determine that kind of, okay, the assets within the group that do not qualify to be measured are in accordance with that. Okay, this is what we've just covered, right? Blah, 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 blah. So these are the points that you need to go with in the exam. All right. So create summary notes for yourself, even main words for each point, and that will make you remember, because you just need to explain, play around there, just in case they say, okay, these guys want to sell. Okay, so discuss if the what? IFRS 5 requirements are met. Discuss 10 marks. Then you find people skipping that theory, saying, me, I don't know theory. I've taught you. Right. Yeah, okay, so these are the steps, blah, 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 blah. All right. Okay, so I don't know, because I'm seeing new faces. Okay, we said we are going to be doing that paper, so I'll just share that paper from the screen. Is that okay? Can you all see what's on my screen?
Yes.
I know the people in the group can have this paper, but I'm talking to those ones that are joining us. The hair salon treatment. Can you all see it?
Yes, we can see that.
Yes,
Right.
we can see it.
Okay. So let's practice. You see, okay, this is the required.